Top of the morning to you, and welcome to our newest episode of Capital Markets Quickie from MVP Mind Value Partners. Last week, the stock market added to its solid 9-month gains, with major indexes reaching fresh all-time highs as Joe Biden was sworn in as the 46th President of the United States. Wall Street's main focus now is the $1.9 trillion fiscal stimulus proposal from the Biden administration and worsening beer illness news coupled with the vaccine rollout. My name is Endrit Cela, coming at you from Frankfurt, Germany, Europe's financial hub and home to the ECB. Let's take a closer look at what moved the markets last week. I think that we can all agree that all eyes were on the United States last week as Joe Biden officially was sworn in as the new president of the United States of America. The world is hopeful that this new president will bring about more stability and a more promising outlook regarding America's foreign policies and foreign relations. After all, America is one of the most important actors in this playground we call planet Earth. Speaking of planet Earth, Joe Biden made due on his promise to re-enter the Paris Accord from which the United States withdrew on November 4th, 2020. And if you've been paying attention, you know that November 4th is my birthday. Well, the stock market and the entire green energy sector is certainly very excited. However, the details of what exactly this means are a little more complicated than just claiming that America is back in the Paris Agreement of 2015. It's more complicated than that. So we'll just have to wait and see. And me personally, well, I am glad that the whole ESG movement is gaining more traction and is more than just a mere trend. Because you know the thing about trends is they tend to die out very quickly. But it seems as if the entire world is behind a greener, fairer, and more sustainable world. More importantly, the financial industry is pouring billions and billions of dollars in ESG funds, ETFs, and the likes of Larry Fink, who is the CEO of BlackRock. Well, they are making noticeable efforts to allocate money in the right places. Now, let's take a closer look at the numbers. The best performing index in our MVP Mind Value Partners portfolio was the NASDAQ 100, which closed the week 4.39% higher. Out here in Europe, the Eurostoxx 50 closed the week flat, only 8 basis points higher, and the German stock index 63 basis points higher, or 0.63% if you will. Well, gold and silver, they also managed to close the week on a positive note. And frankly speaking, the current economic environment which we are in is very much in favor of gold and silver. Now, let me tackle a topic that has a lot of investors worried, and that is that the stock market just keeps hitting new highs. Well, what's wrong with that? Well, whether it's the NASDAQ, the S&P 500, or the Dow Jones, the stock market only knows one direction, and that is up. But for how long, you might be asking? How long can the stock market keep up this pace? Well, the answer is very simple. And don't let anyone else tell you otherwise. No one really knows. But here are a few arguments for a bull market to continue its path higher. Rising corporate profits, easy Fed policy, and loose financial conditions. These three factors are typically a powerful combination for rising equity markets. However, I do believe that two things are very likely to happen in 2021. One, we will see a sector rotation within the equity markets this year. Some of the less popular and more cyclical stocks that have been ignored will get the attention they've been longing for. And two, the stock market is due for a breather before it continues its climb towards the summit. One of the things that has me a bit worried is the fact that the S&P 500 is trading at almost 23 times this year's earnings. Well, that reflects a high level of optimism. And we also see that in the newest surveys of Bank of America fund manager surveys, we see very low cash levels in mutual funds, and that means the stock market must go down before it goes up. After all, as I've said many times, the stock market is all about supply and demand. If cash levels are low, I think we can all agree that the fund managers don't have much left to buy stocks with. Well, this was another fun episode. I'd love to hear from you guys, so make sure to leave a comment, give this video a like, and don't forget to subscribe to my channel. And that, ladies and gentlemen, concludes today's Capital Markets Quickie. To all of you listening from every corner of the globe, I wish you all the best, and stay tuned for our next episode on Sunday, January the 31st.